Dramatic but expected numbers there coming out of China, so let's unpack it further. Dan McClory, Managing Director and Head of China for Boustead Securities, joins me via Skype from Irvine, California. Good to see you, Dan.
Hi, Rachelle.
So give us some context. What's your reaction to China's first quarter performance, given not just the backdrop of COVID-19, but also the data that we saw for March?
Well, you hit on some of the highline numbers that we heard about. Retail sales down 19%, industrial production 8%, electricity generation 7%, fixed asset investment 16%. But guess what? The silver lining is all of those numbers beat the average for January and February. So we're looking at trends here, and we're looking at trend lines. So actually, the quarter is ending on an upward trend. And as analysts out here in San Francisco at Matthews Asia pointed out to me today, they said, Dan, sometimes bad numbers are good. And they gave me two examples. They said, number one, these bad numbers showed that the Chinese government prioritized fighting COVID over any short-term economics. But number two, they're so bad, they must be real. They can't be fudged. So it's a very interesting take, but really no underlying structural weaknesses yet in supply or demand or the financial system. All these things are positives that we would point to. So I think we do need to dig deeper into these numbers.
So then talk about the government's efforts to shore up the economy and the impact that you're seeing.
Well, similar to what was announced in the U.S. and taken up very quickly, the loan programs to small businesses, that's been completely subscribed to. I think the fact that everyone is now out from under the shelter-in-place orders, that says something. Reopening factories, obviously allowing prior to that for the free movement of workers to go back to where they need to resume production. All these are very, very favorable trends. But again, I think looking at some of these alarming looking consumer figures, automotive sales, as you might imagine, were down something like 44%. But guess what? In the second week in April, they were up 14%. Quite a turnaround there. You have large retailers like Nike. They've reopened something around 80% of their 7,000 stores. And the one statistic that I like to point to, because it's in my world of initial public offerings and companies going public, it's amazing that Shanghai overtook Hong Kong and NASDAQ as the top IPO destination in the first quarter of this year, raising about $7 billion. NASDAQ did about $5 billion.
And we're certainly seeing some optimism from the IMF as well. They listed China as one of the few countries that's actually expected to see economic growth this year, and much higher projections, obviously, for 2021. Which sectors do you think are likely to bounce back the fastest, and why?
Well, it's got to be consumer, because that's somewhat influenceable and controllable within China. And there would be certainly some pent-up demand. There's probably a little reticence to immediately spending money coming out of the COVID shelter in place. But I think you're going to see consumer jump up. I think you're also going to see an openness to return to things like eventually restaurants, to some of the hospitality locations. Those internal consumption-related areas, I think, are going to get back online. The areas of challenge, and certainly with a stagger behind them, are going to revolve around things that call for, exports or imports, because, the rest of the world is just now trying to flatten the curve and is perhaps starting to mount their comeback like China is certainly starting to enter into now.
And to that point, the rest of the world is still trying to manage and contain COVID-19 as China is itself rebounding from it. How does that impact then the imports and exports, even though China's market is going to start opening up again?
Well, it's huge, because, if foreign buyers aren't buying because they are now sheltering in place like China was, that's going to have a definite impact on exports. If foreign producers aren't able to produce goods that find their way into China, that's going to have an effect on imports. So the world is so interconnected. These supply chains run so deep and they're so complex that there is really, really a very strong follow-on effect for the rest of the world. So it's not as simple as China coming out of COVID. It's now the rest of the world has to come out of COVID too.
Now, we know that this particular economic shock is unique in that it required consumers to stay away from physical stores. But we're already seeing luxury brands like Louis Vuitton in China seeing spikes in sales. Can we expect to see more of this so-called revenge spending where consumers start binge spending after being cooped up for so long?
You might. I'm surprised at that. I really am. But I think it speaks to the strength of the economy and that particular segment of the economy in China as perhaps being somewhat depression or recession proof, depending upon where we think we are right now. But frankly, I was a bit shocked by that. I would have thought the return to normalcy would have been in other sectors. But as I mentioned with my automotive statistics, I mean, that's not something you just wake up one day and decide, I'm going to buy a car. You think about that, you plan for that, you comparison shop, and you eventually do it. So these higher ticket items will be purchased. It's just a question of in what volume and in what period of time.
All right. Well, always good to see you. Thank you for your insights.